Hey guys, Seeney here from the Australian Wealth Channel, and today we are talking about what the future of Australia's economy looks like. So in this video, we're going to talk about what the future of Australia's economy is going to look like and what that means for the average person. Now, like all other countries, Australia has not been immune to the current global illness that is sweeping from country to country. We thought we had it done here in Australia, but of course, we didn't. It flared back up in Victoria, and they've seen a great deal of problems down in that part of the world. And as a result, Victoria has had to lock down, and a number of different places around the world have had to lock down. And this, of course, has had a very detrimental impact on the economy of Australia and more broadly, the entire globe. So the real question is, what can we expect from the economy in the future? As a result of people not being able to work and these stay-at-home orders being put in place, the government has rolled out programs such as the doubling of the job seeker and also the JobKeeper program, having access to your super early due to the current illness. So this has of course helped to allow families to continue to have income coming through the door. And on top of that, it's also helped to reduce the effects of layoffs for workers. So many countries around the world have printed tons of money for governments to help pay for these programs because they are very expensive. The US in particular has printed so much money. It's over $4 trillion that they printed, which is just an insane amount of money. And of course, the government programs in Australia here, while being very beneficial for helping people through this current crisis, it has also been incredibly expensive, and it is something that we are going to be paying for in the future. I think one of the most damaging impacts that we are going to see out of this crisis is the rise of inflation. Now, during this particular period in time, there's going to be a deflation of the money supply. And what that basically means is that people are going out and spending less. So people that want other people to buy things have to reduce their prices. And that means that the entire cost of everything starts to lower. Now, this is of course the Reserve Bank's worst nightmare, because if your money is getting more purchasing power in the future, then why wouldn't you just hold on to it? Generally, reserve banks around the entire globe want to see around a 2% inflation increase every year. So what that means is that your money is becoming worth less over time. So what you have, let's say you have $100 this year, next year it's going to be $100, but the purchasing power is going to be about $89. The value of your money has become worth less. Now, generally, this is normally fine because wages continue to increase over time and inflation increases also. So what you generally see is that wages and inflation go hand in hand, so it's not too much of an impact on the regular working person. But of course, what happens if we see a stagnation in the wages of people, which we're seeing now, and on top of that, we're also seeing inflation? This leads to a phenomenon called stagflation, which means stagnant economic growth and inflation continues to increase. Now, this is really bad because it means that people start to go backwards. The value of their money becomes worth less and less over time, and they're not continuing to earn more money. So that leaves a lot of people in a harder situation in the future than what they're currently in now. So it means that debts might not be able to be serviced as easily as they used to be in the past. And that of course means tightening consumer spending just a little bit more. And that has a knock-on effect for the entire economy, because what we want is we want to see the velocity of money continue to increase. We want to see more transactions, more money getting out there, shifting hands, because that leads to great economic growth. And if this is not happening and it continues to tighten, then this can only lead to bad things. So how does the government get around something like this? So obviously during this period, people can't spend, so we are going to see some deflation. That would be normal. But to keep people going, the government has printed a ton of money. And of course, this means a lot more government debt. And there's a few ways that you can get rid of government debt, because ideally you don't want to be paying back too much interest on this kind of thing because it really leans on economic growth in the future. So the first thing that you can do to reduce government debt is to reduce government spending. But let's be honest, that's never going to happen because it has never happened in the history of humanity. Anytime governments get access to more money, they're not likely to be rolling that back. So I think we can rule out government spending. The next thing they can do is increase taxes. Now, this is not a feasible option at this particular time. I don't think a lot of people could really handle the hit of an increase in taxes, especially during this period when so many people have been laid off. So taking more money away from people during this particular period in time is not going to be an effective strategy and will lead to quite a negative impact on the economy. So the third thing and the final thing that they can do is they can print more money. And that is exactly what they've done. Now, the problem with printing all of this extra money, it sounds great, but printing money is not free. The cost of this is going to be borne by the society as a whole. Now, of course, this happens in the form of inflation. So what we've seen in other countries that have had some problems with money printing is the rise of hyperinflation. One of the prime examples of this was Zimbabwe, where people would literally be carrying around wheelbarrow loads of cash to just buy things like groceries because inflation just got so out of control. Now, I don't think something like that is going to happen here in Australia. I don't think something like that is likely to happen in the US, but the Fed in the US, for example, has said that they're happy to let inflation run a little bit hotter because it's actually been below what their target rate is. So we could see inflation be 3, 4, even 5% over there in the US, and I think we could potentially see something similar here in Australia. Now, if wages aren't going up, this is going to be very damaging to the middle class of Australia and some of the less wealthy people in this society, because it means the costs of things are going to be rising and they're not making any more money to meet those costs. So take, for example, a loaf of bread. Let's say it costs $3. If you're seeing inflation rise by a significant amount, you might see bread now be $3.10. Now, for wealthy people, this really is not a problem because there's plenty of money to go and buy those kind of things. But for people that are on lower incomes and have tight budgets, this can be a very detrimental thing. And it means that they're not going to be able to spend as much money to put that back in the economy. So the budgets tighten up. And this is obviously bad for a lot of different reasons, which I've said previously in this video. So the future of Australia's economy relies on a lot of external variables. Australia's biggest export by far is all to do with the mining sector, making up more than 50% of the value of our exports. So this is things like iron ore, coal, precious metals, anything to do with the mining sector. Our next most valuable export is the meat sector. Having said that, it only makes up about 4% of the value of all of our exports. So the export of these materials is very reliant on global growth. If we're seeing a slowdown from a number of different countries around the world, then that means that there's not going to be as much demand for Australian iron ore, coal, and other minerals. So if we see struggles around the entire globe, in particular countries like China, then that is going to weigh very heavily on the Australian economy because that is the one pillar that continues to hold up. We have a lot of reliance on mining, and that is one of the things that continues to pump a lot of tax revenue into Australia. So if that's something that decreases over the next few years, then there's going to be a lot of additional problems for Australia to deal with. If this ends up happening, we can probably expect to see some sharp GDP declines even further into the future. For far too long, Australia has relied on the mining sector to continue to make the country really wealthy. And this is, of course, something that could potentially bite us in the backside, especially when tensions with other countries are starting to ride a bit higher than they used to be. The best thing that the government could do right now is to start investing in the innovation of Australia. I personally would love to see a culture of innovation in this country. We see it a lot around the rest of the world. Places like Hong Kong, South Korea, America have great cultures of innovation and creating new products. And I think this is something that needs to be taken very seriously by the Australian government, because the future growth of Australia needs to come from somewhere. And if there's a global slowdown, then it is not going to come from the mining sector. So if we don't see too much innovation in the future for Australia and we continue our reliance on mining, then I think that the future of Australia's economic outlook might not be as rosy as it has been for the last 20 years. Having said that though, I believe that the Australian dollar is going to rise in value over time compared to the US dollar for the reason that they have printed so much extra money. And I think there's going to be a lot more problems with inflation over in America compared to Australia. So of course, as you print more money, the value of each dollar becomes worth less. So I think we can expect to see the Australian dollar rise and become a little bit stronger. So this is great for importing goods, but of course it's not so good for exporting goods. So things like the mining sector. In regards to what the stock market's going to do in the future, who bloody knows? But like the US counterpart, it is at this point quite highly valued. Now that is not every company. There are still some deals in the Australian market as there are in the US, but as a general rule, the market is very hot at the moment. So, you know, we might continue to see that increase, or we might see a drastic decline. With real estate, like I said in a previous video, I believe that the capital cities are not going to see too much growth in the future, because as the working from home trend becomes a bit more prevalent amongst society, I think people will continue to leave the cities and go to more regional areas where they can get more bang for their buck, get nicer houses, more space, and can still continue to do the job that they were doing previously, because a lot of these jobs only rely on the internet now. So if you have internet access, that's going to be really easy for you to complete your job regardless of where you live. So I think we'll see a bump in the prices of regional areas such as Albury, Orange, Bathurst, and a lot of other areas that are not too far away from the city, but a little bit further out, because there's so much extra government infrastructure now that's going into these places. I think in the cities, commercial real estate is going to be way down, also for this reason, and residential real estate is not going to see much growth in the future. So how does the average person get through a period like this? So personally for me, if we see this start to play out a little bit more, then what I would be doing with my money is not holding too much cash, obviously, because it is losing value over time. And that is the last thing you want. So I think it's worth putting some percentage of your savings in some kind of precious mineral, such as gold or silver, and potentially holding other assets that are tied to inflation and will continue to rise in value along with inflation. So with my investments, I am going to continue to be spread out amongst a diverse portfolio of investments that inflation will not really have an effect on. So that's things like buying houses outside of the capital cities. So 30 minutes, an hour, 2 hours away from the center of cities, I think is going to be quite strong in the future. And also a diversified portfolio of stocks. Stocks that have intrinsic value and are needed by society and are going to continue to grow in the future. I think that's the best way that you can hedge against inflation. So I'd love to know what you guys think. Is this stagflation theory going to play out? Are we going to see not too much economic growth, but are we going to see prices increase? I'd love to hear what you think, and I'd love to hear about what you're investing in at the moment. So thank you guys so much for watching this video. Make sure you like and subscribe to the channel. We're going to be continuing to put out more videos in the future, so please get on board, share it with your friends, and we'll see you later.